Over the next few minutes, we're going to unpack some really crucial tax changes coming up for UK savers. And, more importantly, we'll talk about what you can do about them right now to keep more of your own money. Now, this entire breakdown has been put together for us by the tax experts at Pro Tax Accountant. They've really crunched the numbers to map out a clear path through what's becoming a pretty complex financial landscape here in the UK. So let's kick off with a big question, one you've probably been feeling lately. Have you noticed you're paying more tax, even if your paycheck doesn't seem any bigger? Well, let me tell you, you are not imagining things. Okay, let's dive in. Think of this as a complete financial MOT. First, we're going to tackle something called the Great Tax Squeeze. Then we'll get you an update on your ISA strategy and have a look at future-proofing that pension. After that, it's all about shielding your savings and dividends. And then, right at the end, we'll pull it all together into a simple 2026 action plan. Right, first up, the Great Tax Squeeze. This is all about a kind of stealth tax, one that a lot of people just don't see coming, but it makes a real dent in your take-home pay. The culprit here is a little something called fiscal drag. Now, it sounds a bit technical, but the reality is dead simple. When the government freezes tax thresholds, but your wages go up, even just a tiny bit to keep up with inflation, more of your money gets dragged into a higher tax band. Basically, you haven't had a massive promotion, but the tax man has given himself a pay rise straight out of your pocket. Let's make this really clear with an example. So this is Aisha. She's a freelancer working in London. This year, her income is £50,000, which is just under the higher rate threshold of £50,270. So far, so good. She pays no tax at the 40% rate. But next year, she works a bit harder, gets a few more clients, and bumps her income up by just £2,000 to £52,000. Because that threshold is frozen solid, £1,730 of her new earnings are now taxed at 40%. That's an extra £692 in tax. A classic and costly example of fiscal drag. And look, this isn't just about a few people like Aisha. The scale of this is absolutely massive. By freezing these personal tax thresholds, the government is on track to raise an extra £8.3 billion. That's a policy that's going to affect millions of us all over the country. So with taxes on the rise, your first line of defense is your tax-free savings, right? But that's not all. Here's where most people go wrong. The rules for one of the UK's most popular savings accounts, the Cash ISA, are about to change in a big way. Okay, here's the change you absolutely need to know about. Right now, and up until April 2027, you can pop up to £20,000 into a Cash ISA every single year. But from April 2027, that specific Cash ISA limit gets slashed to £12,000 for most savers. Now, your overall ISA allowance stays at £20,000, but it means if you want to use the full whack, you'll have to put at least £8,000 into other types of ISAs, like a stocks and shares ISA. And believe me, this change is going to affect a huge number of people. Just look at the figures for 2022/23. Over 63% of all ISAs opened were Cash ISAs. It is the go-to savings product for millions. So this reduction, it's a major, major shift in the savings game. But wait, here's a quick and really important exception for you. The government has confirmed that savers over the age of 65 will get to keep their full $20,000 Cash ISA allowance, even after these new rules kick in. So what's the game plan? Well, first things first, maximize your allowance now. You've got until April 2027 to use that full 20 grand limit for cash, so make hay while the sun shines. Second, start looking at other options, especially if you're saving for the long term. A stocks and shares ISA could be a great home for anything over that new £12,000 cash limit. And third, don't forget you can still move your existing ISA money between different banks and providers to hunt down the best rates. It doesn't affect your annual allowance at all. Okay, stay with me here. The next point might genuinely surprise you. While the ISA changes are pretty close, there's another massive change coming to pensions. It's a bit further down the road, but it's something you really need to start planning for today. It's all about a popular saving method called salary sacrifice. And here is your pro tip. From April 2029, a new cap is coming in. From that date, only the first £2,000 you put into your pension through salary sacrifice will be free from national insurance. That is a huge change from the current system, where there's no limit at all. It means the next few years are an absolutely crucial window to make the most of this benefit. Let's bring Aisha back to see what this actually means in pounds and pence. Say she puts £3,000 a year into her pension using salary sacrifice. As it stands today, she's saved £240 in national insurance. Nice. But after April 2029, because £1,000 of her contribution is now over that new cap, her NI saving drops to just £160. She's 80 quid worse off every single year just for saving for her own retirement in the exact same way. So it's not just our salaries and pensions getting squeezed. The government is also tightening the screws on income from investments and other savings. If you're a business owner, an investor, or you've got some decent savings tucked away, this next part is absolutely for you. You know, a perfect example of this is the tax-free dividend allowance. That's how much you can earn from dividends before you have to pay any tax. Just look at this timeline. Back in 2016, it was a pretty generous £5,000. It's been chopped and chopped again, and today it's just £500. That's a staggering 90% cut in less than a decade. And on top of that tiny allowance, the actual tax rates you pay on dividends above that £500 limit are going up too. From April 2026, the basic rate jumps by 2 percentage points to 10.75%, and the higher rate goes up to 35.75%. This is going to hit company directors who take profits as dividends, and pretty much anyone with investments that aren't inside an ISA. And the hits keep on coming. From April 2027, the tax on your savings interest and any income from rental property is also on the up. All the rates are rising by 2 percentage points, which creates these new tax bands of 22%, 42%, and 47% just for that type of income. Phew. Okay, so we've covered a lot of ground there. Frozen thresholds, shrinking allowances, rising tax rates. It can all feel a bit much. So let's bring it all home and pull it together into a simple, effective action plan you can start using today. Here are your 4 key steps. Number 1, review. Get a really clear picture of where all your money is and how it's actually doing. 2, calculate. Use what we've talked about to figure out roughly how much more tax you could be paying in the next few years. 3, and this is the big one, Maximise. It is all about using every single tax-free allowance you have right now, like that £20,000 cash ISA limit and the unlimited NI relief on salary sacrifice before they're cut or capped. And finally, number 4, consult. Everybody's situation is different, so having a chat with a tax expert can help you build a strategy that is perfectly tailored to you and your goals. Right. Now, it's really important for me to say that the information we've gone through here is for general guidance only. It should not be exclusively relied on to make financial decisions. It is not official financial advice. And of course, tax laws can and do change. The financial landscape is definitely changing. There's no doubt about it. But with a bit of forward thinking and the right strategy, you can absolutely navigate these challenges. So the real question is, are you ready to protect your savings and start building a genuinely tax-efficient future for yourself? Before you make any big decisions, it is so important to consult an expert. To get a personalized plan that helps you navigate all these changes, get in touch with the team at Pro Tax Accountant today. You can reach them on WhatsApp or by phone at 07985 689912. Or you can drop them an email at info@protaxaccountant.co.uk. I'll just say that number again. It's 07985 689912. Thanks so much for your time.